Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway. Let's get into the action today on this Monday, November 17th, 2014. All right, number one, markets are flat to negative. NASDAQ taking the brunt of the selling along with the Russell, which is the small cap index. Both of those indexes are down almost 0.5% on the day. However, the Dow just down 2 points, S&P down under 2 points. So again, the S&P and the Dow are doing very, very well. There was some M&A action, Baker Hughes being bought out by Halliburton. That's helping the Dow. You also have some other stocks in the Dow Jones Industrial Average that are doing a little bit better today. One of them of note here, Home Depot, HD. If we take a look at HD here, you can see Home Depot still up 29 cents. Was up more, has come in a little bit. But notice this support area. They got 50 MA and the 200. And sure enough, the stock is finding support. Initially bouncing off the 50 right here. Then coming in, kissing the 200. And now bouncing above off of that as well. Other stocks in the Dow that are green today. You have Intel up slightly. Coke, Hewlett-Packard, Walmart, Johnson & Johnson, Travelers, GE, and Merck. All positive along with Home Depot today. All right, so that's what we have going on there, guys. And again, going back to the SPY, I want to explain exactly what today's action means. Overnight, we had some pretty shocking news out of Japan. It appears Japan has fallen into a recession. This is a surprise event. No one expected this. And again, the key here, I think the bigger picture, one thing that the market really doesn't care about right now, but will eventually care about, is that if the Japanese central bank, all right, so the Japanese central bank has printed more money than the Federal Reserve by many, many billions, if not trillions of dollars, probably trillions at this point. All right, that's how much they have printed. So they make the Federal Reserve, in terms of printing of money, look like a little baby. Now, if their economy cannot grow, cannot sustain growth, all right, with all that printing of money, at some point, this market is going to get a reality check. Now, in the short term, the market is in bull mode. The market is in euphoric mode. Everyone's buying every little gap down in the markets, every little sell side. That's what's being done right now because, again, where else is money going to go? I mean, think about it logically. Well, you don't want to be in Japan now because they're having a recession. Europe is in a recession too. All right, China's China. You can't really invest too much in there. You can invest in individual stocks, but they're looking at a lot of trouble there as well in their economy. South America's looking poor. So really, where's the best market? The U.S. So people are willing to commit, even at these high levels on the S&P 500, to be buyers on every little dip. Now, eventually that will change, but right now that's what's working, and therefore you have to think that it's going to continue to work until proven otherwise. All right, and again, you can see today the markets opened slightly lower on that Japanese news. Then we spiked higher because of Mario Draghi, the European Central Bank chief, gave a little bit of a nod to potential buying of bonds in the future. Markets popped up, perfect little double top from Friday. We then reversed, made a new low before bouncing back. Now, what I want to show you here, many people would look at this as a lower low and a negative, right? So here's your low from the opening candle of the day, and here's a lower low. However, the methodology that we have learned and studied and brought to our members here at InTheMoneyStocks.com clearly does not point this as a sell signal. Why not? Well, you see this low from the first candle of the day? Notice how we pierced it, but then they bounced it back above to close the candle above this low. So even though we were lower intra-candle on this 10-minute chart, by the end of the candle, they closed us back above, and that is actually a buy signal. All right, that shows the inability of the market to close below the low here from the first candle, at which point, if you had done that, if you had closed below, a sell program would have come in the markets. Because you didn't, the computer programs then trigger a buy program. Buy program up, up, and away. Look at the volume in this market disintegrate, and where are the markets? Basically flat on the day, spiders down 15 cents. So again, this is just little nuances that you have to pay attention to on the charts to fully be versatile in profiting in any market condition. These are the things you must read. Okay? All right, in all fairness, same thing applies here. All right, just like I talked about a close, it didn't close below the low of this first candle. Well, look at this high from Friday, and look at how the market popped up here, pierced that high, and then pulled back and didn't close above that high. If it had closed above that high, it would have been a buy program. Instead, because it closed below, the sellers came on and we pushed all the way down to the lows. Right? So it really works amazingly well almost day in, day out on every situation. Now, again, volume is getting lighter here. You anticipate upside with lighter volume. In addition, the markets had a little bit of a buy signal right here. They're floating back. The big question into the end of the day is, do they close this market green again? All right, and again, a couple little side notes here you want to look at. The IWM, which is the Russell, guys. Take a look at the Russell today. Russell is down over 0.5%. So that's showing relative weakness. Russell, to me, is a leading indicator. If we look at the QQQ's been on a monster tear. It's had a great bounce off the 200 here, but it's still weaker on the day. So those two indices, which are higher risk, and this is important, guys, those are the two higher risk indices. So people are slightly pulling back on risk today, which is what you're seeing, and that's why the NASDAQ and the Russell are down relative to the S&P and the Dow. S&P and Dow are known as being safer indices, and therefore they're kind of the stronger ones. And again, the Dow is now up 2 points on the day, continuing to gather a little bit of strength. Now again, markets today most likely will end around the flat line. I'm curious to look in the end of the day and see if we get a buy program to hit this market. That's going to be something I watch for very closely. A couple things to note out there. Oil, after getting a great pop on Friday, is pulling back a little bit. Why would oil pull back here? Well, it's easy. Basically, Japan is talking about being in a recession. That means demand in Japan for oil is going to decrease, in theory, and therefore oil prices come down. Now again, as long as oil does not take out this low pivot where we reversed, you actually would still be neutral to positive on oil, and I'm still have a positive bias on oil, even though you're having a small pullback today. But again, as long as it stays above this low, a neutral to upside bias on oil. All right, same thing with gold and silver today. Both are pulling back as the dollar gains a little bit of strength. But again, here please notice how you're still in the upper ranges of this move on gold from Friday, which was an epic move. Therefore, positive bias there. Silver, same thing on the SLV. And again, you can see you've pulled back a little bit, gone sideways most of the day, but still in the upper ranges from this move here. Okay, a couple stocks out there that we're keeping an eye on here. JP Morgan Chase, JPM, remains basically flat on the day. This stock opened sharply lower, but then had a big buy program off of Draghi's comments, and then it came back in here in the last hour or so. It's kind of just settled in basically on the flat line, in line with where the markets are today. Apple today. Apple definitely deserves a note here. Apple today went up to the key level of 115. Look at the high of the day, 115.09. That was a major mid-level even number. And again, sure enough, you pierced it. You put in a little topping tail, and there was your sell-off. Now you're actually trying to fight back off of the lows. But I think today most likely marks a short-term top on Apple. Not to say Apple can't go higher in December or in January of 2015, but in the short term anyways, I do believe that Apple is in a position where it probably is going to have a couple weaker days because it's just had such a big move and it went into that even number. And again, if you zoom out on the charts, look at this move up. Just an astronomical move up on Apple from basically 109, 108 all the way to 115. Percentage-wise on a stock like Apple, that's a huge move. Now you're just having profit takers come in off of that even number of 115. Okay? I think that's about it for today. I might do a couple extra videos today. We'll see how things go. But bottom line is, if you just look at the markets, it's kind of looking same old, same old. Even the Japanese news about recession is not really affecting the U.S. markets as they're still seeing new money flow coming in. It's enough to keep the markets up a little bit. I do think down the line, the fact is the market will realize that if Japan can print this much money, which is way more than the Fed, and still fall back into recession so easily, it definitely puts us in a position to question printing money policy, all these bailouts and all these kind of quantitative easing situations, but we are not at that point yet. You have to understand timing is everything in the market. And right now, the markets are having money flow because the U.S. is the best place to be. Therefore, it's going to keep the markets buoyed for the short term. Question is, at what point does that turn? And that's what I'm going to be following very closely. So come join us here at InTheMoneyStocks.com, folks. If you want options alerts, take the options alerts. If you want stock trades and swing trades and analysis and videos, take the Research Center. It's here for the taking. Enjoy, and I'll talk to you all soon. Take care.